Let's be honest. Nigeria is one country where government taxes come at you from every direction. Salary earners, small businesses, even big companies, nobody is spared. But here's the twist. The wealthy and smart entrepreneurs pay less tax, legally. Why? Because they understand the system. In this video, I'm going to break down the entire Nigerian tax system, federal, state, and local, in plain, simple English, and show you practical ways to reduce your taxes without breaking the law. Taxes in Nigeria are split into three levels: federal, state, and local. First, the federal government, handled by the Federal Inland Revenue Service. Companies' income tax, for registered companies. Value-added tax, 7.5% on goods and services. Petroleum profits tax, applies to oil companies. Education tax, 2.5% of company profit to support education. Stamp duties, charges on contracts, bank transfers, legal documents, customs duties, taxes on imports. Second, state governments. Think Lagos, Oyo, and their internal revenue services. They focus mainly on personal income tax and collect pay-as-you-earn from salary earners. They collect self-employed taxes from traders, freelancers, artisans, and professionals. States also charge levies like development levies, betting taxes, and similar charges. Third, local governments. They handle small levies and rates. Examples: tenement rates, property tax, shop and kiosk rates, market stall fees, signboard and advertisement permits, radio TV license fees. Rarely enforced today, but still on the books. The key thing to remember is, federal, state, and local all want a piece, but you must know who is legally entitled to what. Next, we'll break down what that means for individuals and businesses. Let's start with everyday Nigerians: employees, freelancers, and traders. If you earn money in Nigeria, you must pay personal income tax. If you're a salary earner, your employer deducts it as pay-as-you-earn. If you're self-employed, you must file directly with your state internal revenue service. Rates are progressive, from 7% to 24% depending on how much you earn. Claim your deductions. Don't leave money on the table. Pension contributions reduce taxable income. National Housing Fund contributions are deductible. Health insurance premiums count. Life assurance policies too. The Consolidated Relief Allowance makes a large portion of income tax-free. After CRA and deductions, maybe only N1 $2 million is taxable. That reduces the tax bill massively. Other levies, development levy, often flat N100, N200 in many states. Local government charges like tenement rates if you own property. Every Nigerian earning income must pay personal income tax, claim all deductions and reliefs. Now businesses, from market stalls to Ltd companies. Companies' income tax is paid by registered companies. 0% if turnover below N25 million, 20% for N25, N100 million, 30% above N100 million. VAT is 7.5% added to most goods and services. Businesses collect it from customers. If you sell for N1000, you charge N1075. That N75 goes to FIRS, not you. Education tax, 2.5% of company profit. Stamp duties are paid on agreements and certain bank transactions. Capital gains tax, 10% on profits from selling assets like land or shares. Withholding tax, an advance tax collected at source, typically 5–10% depending on payment type. Sector-specific taxes exist: petroleum profits for oil, special levies for banks and telecoms. Many SMEs mistakenly pay full CIT when they qualify for exemptions. Know your turnover band. Local governments survive on levies: tenement rates, shop permits, market fees, motor park levies. Warning: many illegal collectors appear. Always ask for government-issued receipts before paying. Now that we understand the taxes, how do you pay less, legally? First, practical tips for individuals. File annual tax returns. Don't rely only on PAYE. Claim pension, NHF, life insurance, and health insurance deductions. Use the Consolidated Relief Allowance. It makes part of your income tax-free. Keep proper records, especially if self-employed. For businesses, register properly. If turnover is below N25 million, you may owe 0 CIT. Deduct legitimate expenses: rent, salaries, fuel, internet, travel, loan interest. Claim capital allowances on equipment and assets. Separate directors' salaries from company profits for correct tax treatment. Apply for pioneer status incentives. Tax holidays for certain industries like tech, agriculture, and manufacturing. Invest in agriculture, export, or renewable energy, sectors often with tax breaks. Be careful with VAT. Collect it from customers and remit it. It's not your money. Avoid paying duplicate or illegal levies. Ask for receipts. Consult a tax professional once a year. The savings often outweigh the cost. Always keep receipts and accurate books. Case 1, Mr. Aid, bank employee in Lagos. He reduced his tax by filing returns and claiming pension and insurance deductions. Case 2, Mama Nkechi, market woman in Onitsha. She avoided illegal levies and filed properly with the State Revenue Service. Case 3, TechNova Ltd, applied for tax incentives, claimed expenses, and saved millions. Pay tax? Yes. Overpay? No. Know your deductions, file returns, and keep records. Which category do you fall into? Share your story in the comments. If this helped you, hit like, subscribe, and share because knowledge is money saved. This is general information, not personalized tax advice. Consult a professional for your case.